Picture this: you, me, and everyone you know, terrible with money at some point. Now, credit card debt is soaring, and financial chaos is at an all-time high. But here's the twist. Is it really a good thing if everyone suddenly becomes financially responsible? Let's dive into the paradox. If you're new to the channel, don't forget to hit that subscribe button and ring the notification bell so you never miss an update. Financial struggles are hitting home harder than ever before. Picture this: 2 out of every 5 Americans are blushing at the mere mention of credit card debt. And the shocker? Most of us can't even cover a $1,000 expense without plunging into the deep end of debt. Surprisingly, even those pulling in a hefty $250,000 a year find themselves juggling bills from paycheck to paycheck. It begs the question, is financial responsibility just a golden ticket for the privileged few? Or is it something that should be within everyone's reach? It's a dilemma that keeps us all scratching our heads. With credit card debt soaring and financial chaos becoming the new norm, it's time to ask the tough questions. Can we realistically expect every individual, regardless of income level, to achieve financial stability? Or are we setting an impossible standard that only serves to widen the gap between the haves and the have-nots? Let's talk numbers. We're splurging a jaw-dropping $188,000 a year annually on non-essentials. Meanwhile, baby boomers, our wise predecessors, are facing retirement with less than half of the savings they need. It's a stark reality check that leaves us wondering, what's the price tag on financial responsibility? And while financial guru Dave Ramsey might be giving us all the tough love we need, could there be unintended consequences to everyone jumping on the financial wisdom bandwagon? After all, if everyone's penny pinching, does it leave any room for others to thrive financially? It's a conundrum that's worth unpacking as we navigate the delicate balance between individual financial success and its broader impact on society. Sure, financial responsibility demands an emergency fund, retirement savings, and a paid-off car, but these come at a high cost. Let's break it down. Financial responsibility isn't just about clipping coupons and skipping your morning latte. It's about having an emergency fund for life's unexpected curveballs, stashing away for retirement, and even owning a car outright. But here's the kicker. These essentials don't come cheap. For many, scraping together a hefty 20% down payment for a home before hitting the big 3-0 feels like a pipe dream. And don't even get me started on the hidden costs of living in underserved areas, where a simple trip to the grocery store can leave your wallet feeling a little too light. So, as we weigh the pros and cons of financial responsibility, it's worth asking ourselves, are we being a tad too harsh in our judgment of those struggling to keep their heads above water? The pandemic, a time when many of us found ourselves squirreling away those extra dollars, thanks to a combination of government aid and a sudden decrease in spending. Yet, fast forward to 2023 and it seems like those savings have vanished into thin air, with only the top 20% managing to hold on to their financial cushion. It begs the question, what happened to the good old-fashioned path of slow and steady financial responsibility? Was it merely a fleeting illusion? Or is there still a hope for the rest of us? As we reflect on the aftermath of the pandemic, it's clear that achieving financial stability isn't as straightforward as we'd hoped. While some were able to weather the storm and emerge with their savings intact, many found themselves back at square one, struggling to make ends meet. So, is financial responsibility still within reach for the average Joe? Or are we witnessing a gradual erosion of our financial well-being? It's a sobering thought that prompts us to reevaluate our approach to money management in an ever-changing world. Let's delve deeper into the tangled web of financial responsibility. Imagine a world where every Tom, Dick, and Harry is diligently squirreling away their hard-earned cash for a rainy day. Sounds like a utopian dream, right? Well, hold on to your hats because there's a flip side to this coin. If everyone suddenly jumps on the financial responsibility bandwagon, investing for personal goals could turn into a game of financial gymnastics. Picture this: stocks and real estate prices skyrocketing faster than a SpaceX rocket launch. It's a scenario that even Warren Buffett, the Oracle of Omaha himself, wouldn't be too thrilled about. After all, rapid price hikes could throw a wrench into the gears of long-term investment strategies, leaving many of us scratching our heads and wondering if it's still worth the hassle. But wait, there's more to this financial conundrum. As more folks hop aboard the financial responsibility train, the competition for assets heats up like a summer barbecue. Suddenly, the dream home or cozy retirement nest egg starts to feel further out of reach than a winning lottery ticket. It's a bitter pill to swallow for those of us who have been diligently socking away our pennies, only to find ourselves priced out of the market by our own frugal counterparts. So is widespread financial responsibility a double-edged sword, cutting both ways with its promise of financial security and its potential to lock us out of our own dreams? Yet, amidst the chaos and confusion, there's a glimmer of hope on the horizon. For every financial roadblock, there's an opportunity waiting to be seized. While the prospect of soaring stock prices may dampen the spirits of aspiring investors, it also presents a chance to rethink our approach to wealth building. Perhaps it's time to shift our focus away from short-term gains and towards strategies that prioritize sustainable growth and long-term stability. So as we navigate the murky waters of financial responsibility, let's remember that every obstacle is simply an invitation to chart a new course towards a brighter, more prosperous future. In the grand scheme of things, the question of whether everyone can afford to be financially responsible is more than just a matter of dollars and cents. It's about striking a delicate balance between personal prosperity and societal well-being. While widespread financial responsibility may seem like the holy grail of economic stability, it's essential to acknowledge the complexities and challenges that come with it. After all, achieving financial security isn't a one-size-fits-all endeavor. It requires a nuanced understanding of individual circumstances, systemic barriers, and the broader economic landscape. So, as we bid adieu to this whirlwind exploration of financial responsibility, let's remember that the journey doesn't end here. It's up to each of us to continue grappling with the intricacies of wealth management, advocating for systemic change, and championing a future where prosperity is within reach for all. Because ultimately, it's not just about balancing the books, it's about building a brighter, more equitable tomorrow for generations to come. Thank you for joining us on this episode of Wealthway. We hope you found the tips and tricks shared here valuable for your financial journey. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to stay updated with our latest uploads. Feel free to ask any questions or share your thoughts in the comments below. Until next time, keep striving for success. And remember, your wealth awaits.